Dalal Street takes it on the chin this week. It records its biggest weekly fall in nearly 5 months. The Sensex and the Nifty are down about 2% each. And except FMCG, all sectoral indices have recorded losses for the week. Over the next 30-odd minutes, we will decode the week gone by, the reasons behind this weakness, and take you through some of the most important takeaways from the Reliance AGM, talk about the GDP numbers, the weakness in the Indian Rupee, and put the spotlight on FMCG, which was really the only green island in the market. Hello and welcome. You're with us on the Editor's Roundtable. I'm Rupee Upadhyay, and with me, as always, Reema, Nimesh, and Prashant. Guys, well, thank God it's Friday. The Bulls will definitely be saying that after a week like this.
Yeah, 1% down on Nifty, 2% down on Bank Nifty. It was a tough week.
Yeah, and despite all the festivities in the air, I think the markets today were reflecting the chaos in Mumbai streets.
You know, I'll just say that look at the other two markets, right? Dollar rupee is at an all-time high. Rupees are all-time low. Look at what's happening to yields. It's complete. Well, bonds are sold off aggressively, and Lata, I guess, will join us in just a little bit. Well, actually, the only thing which is still standing is the equity market. Now, I was just thinking, and Devina will also join us in just a bit from now, Nimesh. From the Liberation Day low, when the April tariffs happened, right? Markets all sold off because everybody got handed 35, 50, all kinds of tariff numbers. From that point, from that low, Nifty is still up about 11% from the lows, April lows, Liberation Day lows. Everybody else has got not sweet deals, but I mean, it's no longer 40, 50, better deals, right?
Yeah, better deals than us.
We've gone the complete opposite end, opposite way, right? We're at 50%. Effective is 34%. Yeah. We are still up 11% from the Liberation Day lows. So just food for thought. I don't know. I'm not saying that we go back to those lows.
This is excellent Friday optimism. But, completely new perspective.
No, but
looking at things.
Yeah, but you know, you sold off. Global markets all sold off because tariffs were high and hard, etc., etc. But yeah, I mean, from that point on, remember at that point the optimism here that we're going to get through this the fastest. We're talking to, and of course it's been acknowledged by people like Scott Bessent, etc. But it's not happened. I mean, things have gone completely sour.
But the market is still up. It's Prashant's green color shirt. That's where the optimism is coming in from. But very quickly, let's recap the week's numbers and just look at what the tally is finally looking like. So we have ended at the lowest point of the week on Friday. We're also just a stone's throw away from those 3-month lows on the Nifty that we are talking about. And what has happened is, let's look at the different indices. It's not just a large cap specific fall or, one or two sectors falling. The overall market has fallen. So the Nifty is down 1.7%, mid cap index is down a little over 3%. The small cap index is down almost 4%. Now, you'd wonder, are there any new triggers? Well, it's not new, but it's all of it coming together. First and foremost, that 50% tariff reality. It's finally hitting home. And as we keep talking about it, the first order effect is not what the market's concerned about. It's a second order concern that's actually showing up. And some of that obviously brings us to the next point, which is FPI selling. August has been once again a brutal month in terms of the FPI outflows. We saw those outflows in July. The July figure was almost 17,700 crores. The August figure is now nearing 29,000 crores at last count. We'll have the updated numbers in the first week of September, but the numbers have been pretty bleak. And finally, this whole earnings pickup story on which hopes are pinged, here is where there is concern going by valuations. Very quickly, let's talk about the sectors. Worst performers of the week. Capital markets down 7.6%. Real estate down 4%. PSU banks down 3.5%, oil and gas 3%, even the broader financials, Nifty financials down about 3%. So short point, no place to hide, barring the consumer hope. The Nifty FMCG index managed out about a 0.5% gain. And really, Nimesh, that's what it's all about, right?
Yeah.
Hopes that the festive season, this GST cut will work some magic for the bulls.
If it was my piece last week, right? And I said clearly that there could be a shift from capex to consumption. And it clearly played out this week. The index is actually outperformed everybody else, right? The Nifty is down, Bank Nifty is down, but FMCG index is up. And look, the kind of opinions which are coming in, the kind of notes which are coming in throughout this whole week. In fact, today itself, we had two big, global strategists adding auto names, which is like a consumption story for India, into their model portfolios. Jonathan Kahn has added M&M, and Chris Wood has added Maruti. So again, it's the other way around. But both have added the two auto names this week. Also, there was a CLS note in the middle of the week, and he very clearly said that if the GST cuts have come, or when it comes, you might see further impetus for the consumption stocks to do well. vis-a-vis capex can suffer, and also some revenue sectors like OMCs can suffer. So clearly, the market orientation seems to be heading towards consumption, at least for the time being. And if there is a very aggressive GST cut, you might say this momentum to just go on in the consumption path.
How did we finally end? Because when we started...
lowest point of
We ended
day.
the lowest point, 70 points.
No, I'm saying autos and... because in the morning, auto index was
All
down.
sold
Auto index was down.
And FMCG was up.
Yeah.
That's how we closed?
That's how it was. FMCG was the only green spot. There were some names like L&T and BEL from the industrial side, but largely it was...
So, and we were making this point in the morning, auto month to date, till yesterday's close, the index is up almost 7%.
Yeah.
Correct.
That is...
So there's a bit of preemptive...
kind of thing. And FMCG is actually just 0.5% change.
Yeah.
Till yesterday, month to date, coming into the GST actual
But we are heading into the GST,
So,
the FMCG index overall for the last couple of years have underperformed.
Oh,
There
yeah,
is a bit of
big time.
Big underperformance, and of course, valuation are not out of the whack compared to the historical averages. They're still in that medium range. So there is a valuation comfort, and there is this big tailwind comfort which can come in.
Yeah, let's actually ask Devina this big question. Devina, thank you so much for joining in, and happy Friday to you. So what's the sense? I mean, is this hope on consumption revival? Is it really well placed? Would you be advocating for any kind of portfolio tweaks in favor of autos or consumer, FMCG, or even consumer durables for that matter?
Hi, Surabhi. So, I mean, I have been talking about a consumption revival even before this GST talk came about. And consumption actually had started accelerating towards the end of last financial year itself. And then you had the better than expected GDP numbers. And more than that, the cooling down of inflation, and especially of crude oil and food products. So to my mind, these were the things which would help boost the consumption plays, both on the revenue side and the margin side. I think I spoke about it last time I was on your channel too, which was before this GST talk, that in a household budget, when food prices are too high in a place like India, it crowds out even routine FMCG type consumption. So that there's going to be relief, and also crude prices coming down mean a lot of downstream chemical and petrochemical prices coming down, which again are input for a lot of industries, including FMCG. So both those fronts I was expecting a boost, and we have been overweight both FMCG and more auto components than autos for a while, and along with the pharma healthcare. So these have been areas where we have been overweight. So that pretty much continues. Of course, in the short term, this uncertainty on the GST, even though it's a positive, on the positive side, would mean I'd expected the earnings picture to be better in the second quarter. Now, I think it might get pushed a little because some of those purchases might get deferred. But I think the market will look through that, because this is like just a temporary blip or a postponement. And in the end, it's going to be beneficial for the industry. So, but it definitely means that the acceleration in earnings that I thought would come through in Q2 may not come through to that extent on an aggregate basis. And also, I mean, talking of markets, I think to some extent the indexes are not even capturing the real red in the portfolios. So, as this is not a current number, it's probably a week old or so. We were looking at that between all the indices, they were down about 7 to 10% from the top, whereas 90% of the stocks were down more than 10%. So that's huge. In normal markets, something like 40 to 50% of stocks outperform. Even 25, 30% outperformance means the market is narrow. To have less than 10% stocks outperform the index is very drastic.
And that's actually, Devina, we were discussing this, Nimish, right? Just that it's
a tough
nobody's
market.
making money. I mean, we seem to be talking to a lot of people, and whatever you do, eventually you're not ending up with gains that you get to keep. And that's been true for the last few months now. But Rima, the Jio IPO, Have we got clarity?
Actually, there were a lot of headlines. The big one, of course, was the Jio IPO. It's now, the timeline has been set, H1 of 2026. The second one was an AI. Just the way Reliance Industries democratized data with Jio, now they're planning to democratize AI. It's AI everywhere for everyone. They've also set up a new wholly owned subsidiary. It's called Reliance Intelligence. They've announced a partnership with Google, a $100 million JV with Meta too. On consumer, the big headline is that the company, has the potential to grow at 20% CAGR. They're targeting a 1 lakh crore revenue in the next 5 years and become India's top FMCG company. On the new energy business, what he said is that it has the potential to become as large or even bigger than the traditional O2C business in the next 5 to 6 years. But in a nutshell, he sees a lot of growth opportunities, whether it's O2C, whether it's FMCG, whether it's Reliance Intelligence. And on the whole, they reiterated that Reliance's EBITDA will double by 2027. So, there are quite a few catalysts, but the surprising thing is the stock ended, much lower, and it kept falling as the announcements trickled in.
Guys, that's what I say, and that's what at times you wonder. How negative is this market feeling? And maybe Devina come in on this. You have a GST announcement and a massive big one. The market pop lasts for barely 2 days, 3 days. The Jio IPO has finally been announced, and it's not like Reliance rallied some 5-6% going into the AGM announcement, and yet the market's reaction. So the market is also indicating something. What would you read through from the market reaction to some, seemingly really positive news announcements? I will have this GDP number reaction on Monday, but what's your sense?
Let me just finish what I was saying earlier, that now this time 22% of the stocks have fallen more than 50%. So that's like one skew. GST, we haven't yet got the announcements. We have only got an indication. And of course, that's, I was just joking with someone that when I used to work for Citibank, we had gone on an offsite and a department talked about how they were working day and night to put some system which had crashed into place. And then at the end of it, they kind of stopped for applause from the bosses. And the boss kind of gave a cold look and said, but you created the mess. So GST to some extent is, could have had a simpler system to start with. But nevertheless, let's see what the exact numbers come out to be. As far as the Jio IPO is concerned, I think there are some valid concerns about how good will it be for the Reliance shareholders, because I haven't seen it properly, but from what I just, I saw, that was that the shareholders don't get anything, and normally holding company discounts are pretty steep in India. So holding companies typically don't get valued for what they are holding to the full extent or anywhere close to the full extent. And Reliance, and on the energy side also, while they've got this cheap crude, Russian crude, again, it has not been fully captured in the profitability of the company as far as I can see. So, there have been some gray areas there, probably that those are the causes for concern as far as that particular stock is concerned. But I think overall, see, any of these tariff announcements and things like that, mostly there is a knee-jerk reaction, just as there is to a geopolitical development. But after a while, the market thinks through who will it impact, how much will it impact, and if that impact is not so significant, then slowly the market finds its equilibrium again, the stock prices find their equilibrium again.
No, absolutely. Devina, just coming back to you, but let me go across to Lata now, who's also with us. GDP numbers have surprised to the upside. Lata, tell us, stronger than what everyone thought?
Stronger is a very weak word. It is an outstanding number, and the market better sit up and notice this number. 7.8 is a number to kill for. Even the best estimate I got and I had taken some 15 estimates, the best estimate was 7%. This is a very good number. Compares with, of course, 6.8% a quarter ago and 6.5% year ago. The GVA is also good. Sometimes, it's just because of indirect taxes and low subsidies that the GDP tends to look good. No such tomfoolery over here. It is a clean, good number. 7.6% is the GVA growth as well. Very good. Nominal GDP also has come in at 8.8. Now, I was worrying that whether that would be very low at 8% or something, because the wholesale inflation is very low. But 8.8 is good. The budget estimate is actually for 8.1. Compared to that as well, this 8.8 looks very good. The specific numbers, contributors which are very good are the services sector. Trade, hotels, transport and communication, a very good employment sector. Employment intensive sector has grown at 8.6, very good number. Government has done its bit. Obviously, CapEx and RevX have been good. That's why you have a public administration contribution of 9.8%. Again, if you look at GDP from the expenditure side, both consumption and capital formation are good. Private consumption growing 7%, capital formation growing 7.8%. So the bottom line is it's much better than what the street expected. Street has to take note of this number. I expect all economists to push up their full year numbers.
Wow.
I wonder, and this is Mr. Trump's definition of a quote-unquote dead economy,
Dead.
really? Yeah, that's okay. We'll take it. But Lata, let's talk about the other thing, and that was maybe a little more concerning. This sharp fall in the rupee. I know you've been saying that maybe a gradual decline is something that's actually good for India, but what happened on Friday was rather dramatic.
Yes, it is. Once up until 87.95 thereabouts, it looked like the PSU banks were selling on behalf of RBI and supplying. We saw a goodish bit of demand in the morning from companies as well as from FPIs who have been taking away dollars. But once RBI let go that 88, then it just cascaded to 88.30. And then again, of course, you saw a lot of supplies coming from the Reserve Bank. Clearly, there are concerns. At 87.95 thereabouts, there were a lot of people who are supplying. The exporters are supplying at that point, but then they suddenly become short sellers. Because the rupee has crossed 88, and thereafter you saw them covering the shorts, and then you saw new importers coming in and hedging because they didn't expect 88 to be crossed. Then it becomes a bit self-fulfilling. So now, people will start talking about 89 very easily because that 88 Lakshman Rekha is crossed. The positive in this whole thing is that maybe the Reserve Bank is also letting go by design because it helps your exporters. And also, today we touched a historic low versus the renminbi. Again, I would think this is by design. At 12.32 rupees per yuan, this is the lowest that we have touched. A little bit is actually positive for beating the exporter blues.
Sure.
Okay, all right, Lata, thank you very much for that. So on that note, we have to take a very quick break, come back, and some more questions with Devina in just a bit.